Hi everyone and welcome to Inderes TV. Today we're going to talk about Nokian Renkaat with Analyst Rauli Juva. Welcome.
Thank you.
So how do you say it? Is it Nokian Renkaat or Nokian Tyres? What's the official name?
Yeah, I would guess it's in Finnish Nokian Renkaat, but since Renkaat means tires, it's typically translated to Nokian Tyres when talking in English. So we can say Nokian Tyres. So everybody knows what we're talking about, even if you can't speak Finnish.
Yeah, Tyres is also the ticker. So yeah. So let's go with that one. But when in Finland we say Nokian Renkaat. Yeah. Actually, Nokian Renkaat, it's a. I would like to say it's one company before the exit of Russia and one company after the exit of Russia. Do you think I'm right or?
Yeah, well, obviously it's the same products and same brands, so in that sense it's a lot of the same, but it has changed or will change quite a bit since before the exit from Russia. Russia was their single biggest market. If we're talking about countries, it was about 20% of sales, and back in the days it was even much higher, especially earnings terms. But in the past few years, 20% of sales. But then the main production plant was there, so it was 80% of the passenger tire car volumes, which is the main division in the company. So production-wise, it was really the key. So that will change, of course, quite a bit.
Yeah, and the story changed. In March they exited Russia.
Yes.
And actually, Nokian Tyres was one of the few companies that actually managed to get some money out of Russia as well.
Yeah, they got a decent sum, like 250 million euros, which is nothing compared to the actual value of their assets, but still they were able to. First of all, able to exit in the first place, and then even getting some money. So I think that was a decent achievement, even though it was of course a huge loss for the company.
Yeah, and how are they gonna build it from now on? Because as the company stated, they have hit bottom when it comes to earning at the moment, and they're now building it all over again. What are the stepping stones?
Yeah. Well, they do have this Finnish plant, which they did have before, so they have increased capacity there. So that's one thing. So that's enabling or kind of delivering the tires to the Nordics and some also to Central Europe. And then basically what they need to, since the Russian market is completely out, you don't obviously have to produce anything there anymore, but you need to replace the part which was exported from the Russian factory, which was roughly half of the volumes there. So they.
And when we're talking volumes, how big amount volume? How many tires are we talking about?
The Russian factory was making something like 15-16 million tires. So they
that's a whole lot of tires.
That's a couple of tires. Yeah. So they need to replace that, and that will happen already. That has happened through the increasing volumes in the Finnish plant, and then initially that will partly be compensated by subcontracting volumes. So they will be getting some 1.5 million from that this year, and close to 3 million then in the coming 2 years probably.
So what will that do to the margins? How much does it cost compared to making it yourself?
Yeah, that will obviously dilute the margins. The company has not open up that in detail, but I would say if their own production in Finland makes maybe 15-20% EBIT margin, you're definitely in the single digit when you're talking about a subcontracted volumes. So that's clear. So that's kind of the quick fix to increase the subcontracting, and then they are simultaneously building a new plant in Romania, which started now and which should be already, or last spring, and which should be already producing the first tires in the end of next year. So that's a pretty swift timetable, but then ramping up those volumes will take a couple of years, and that will be a 6 million tire factory when it's all done. So then they should basically be kind of filled up the gap which was originally delivered from the Russian exports.
Yeah, but I heard something about that they will not put all eggs in one basket going forward and kind of more split their production capacity. So we have this Romanian project, and where and we have the Finnish. And what about the US?
Yeah, exactly. We didn't mention that. So yeah, they started that already quite some time back. Obviously, when they had this big factory in the Russia, and it would have been still possible to even expand it further. But then they have started to build the US factory like, I don't know, 5-6 years ago or something like that, which is now up and running, and now they will have, like I said, they will have one in the Nordics, one in the Central Europe, and one in the US, which is pretty logical since those are the main markets also. Well, so that makes quite a lot of sense, and that will be the way going forward, and they will also use this subcontracting to some extent going forward to kind of keep the flexibility, and that's maybe the US is maybe the part that hasn't changed really in this process, since that has been the kind of growth market with the capacity in investment also before the Russian exit, and that will continue to be.
And that one is on track, like.
Yeah, well, it's now better on track. Yeah, it was quite a sluggish process to get that factory up and running, especially during the COVID time. So it has taken quite a bit more money and time than it should have been. But now it's progressing towards the 4 million. That would be the volume, the kind of the initial volume level there. And since US is quite far away from Europe, it's not likely that factory will so much compensate for the loss of the Russian factory. So that's more focused on the US market, and then these two then are focused in the European market.
So what about this Romanian factory? It's they started the project. It's kind of it's not. Is it up and running to some capacity? What did you say? I did.
It should produce the first kind of test tires in the end of next year, and then some commercial production in 2025. But it's obviously not the full 6 million in 2025. Yeah. But then in a few years, like 27, I think it's the company target to have it up to the 6 million.
What about debt level on this one? Because building a factory in Romania, I heard something about possibilities to get subsidized from the. Yeah.
Indeed. So that's quite likely. So yeah, they will need to raise debt, especially since they decided to continue actually paying a decent dividend even throughout this weaker period, which we kind of initially thought that they wouldn't do. So that will consume some of the money, but it's a 650 million investment, and they should get this 100 million subsidy from the Romanian government to that, and then if kind of just kind of ballpark thinking where the money comes from, so they get the 250 million from the Russian exit, and then it leaves kind of 300 million, which they need to raise in debt, which they've actually already done during the last spring. They raised quite a bit of debt, so they have over 400 million, I think, in the kind of bank accounts at the moment. So
it's possible to spend on the kind of ramping up the factory and paying the dividends.
So they basically have the money already almost at hand or at the pockets, but obviously the kind of the debt metrics will raise a bit, but with our estimates they won't even go over 2 times net debt to EBITDA, so it will actually be pretty moderate still, since they were luckily they were starting with a net debt free company basically, so they have the ability now to leverage it a bit.
Yeah. So it was kind of a good time to go into catastrophe.
Yeah, well, that's how the company has been running their balance sheet for quite some time, and now actually they kind of afterwards commented that was partially due to the kind of risk in Russia. I don't know if that was the whole story, but anyway, it's good that they have had the strong balance sheet. Otherwise, it would have been more difficult, of course.
Yeah. So how should you evaluate this thing? I mean, we had a bit sluggish in the US, but that is now up and running. We have all these problems with Russia, but now, I mean, still getting some money from there, and then the ramping up in Romania and all this other, I mean, loose ends around. Yeah,
it's well, like we think of it. You have to look a few years ahead when they have this Romanian plant actually up and running, and because the current earnings level is not in anyway any kind of reflection of the potential of the company. Obviously, you shouldn't look at the history either, because those margin levels, which with what they did with the Russian factory and Russian market, are so high that they are not achievable.
Yeah, and but that's a totally different game. So you have to kind of
think it But you need, but anyway, you need to think of what kind of capacity they will have with the Romanian plant and what kind of earnings level that could produce, and then kind of discount it back into the current moment. So that's how we have thought of it, that in 4 to 5 years they should be able to do well over 200 million euros in EBIT, and this year they are below 100. And if we look at the company's targets, it would be actually 300 million in 2027.
And do you think they will manage that?
Yeah, not the targets on the margin level, but like I said, we believe that they should definitely reach something between 200 to 250 million in 27, 28. So clearly higher, of course, than the current levels. But that does require that they will be able to keep on growing moderately in the US and hold on to the market shares in Central Europe through this, mainly this year, when they don't have enough capacity to deliver, so they will kind of automatically lose some market share this year. That's inevitable, but then gradually get it back over the next few years as they increase their capacity.
That was actually one of my questions. I forgot to ask. What about, do they have the possibility to deliver to everyone, and what will that do to the?
Yeah, no. Especially in the summer tires, we could see already in the first half that the sales to Central Europe were down quite drastically. So definitely not in the summer tires. In winter tires, which is better margin and kind of the core products, they should be kind of closer to that, but I think also in winter tires they are capacity constrained, so they cannot deliver this year yet, because the outsourced or the subcontracted volumes are not coming in, like I said, in full this year yet.
Yeah. So what do you think? What's our stand here? Should one buy or should one stay or go or no go?
We have a buy recommendation on it, but it's definitely requires quite a long horizon. So if we think about the next 12 months, which is our target price setting, I have difficulties kind of saying that what is the thing that would drive this to X% up or to X euros in 12 months, but definitely after this year it should be improving earnings, and then gradually positive news on the ramp up of the Romanian factory, which should kind of gradually build up the confidence that the kind of earnings level that we or the company are planning will be actually achievable in a couple of years.
Something for the long run there.
Yeah.
And if you want to read the whole research about this, then look down the link below. Thank you, Rauli Juva, for all these comments.